So this is an absolute must watch for any new business owner. Knowing what expenses you can claim is going to decrease your tax bill, so make sure you watch the full video to make sure you're maximising your tax knowledge. Hi guys, welcome back to my YouTube channel. Joshua Tharby here, Chartered Tax Advisor, founder, Managing Director at JASM, an award-winning firm of chartered tax advisors and accountants. Today I'm telling you all about expenses, what you can claim, how you can claim them and how far you can go back. It may surprise you exactly how far you can go back, so make sure you listen out for this. But first, please make sure you give this video a big thumbs up, and also you hit that subscribe button with notifications turned on so you get notified as soon as you post more brand new tax saving content. So what kind of expenses can you claim? Well, the rule is essentially you can claim expenses that are wholly and necessarily incurred for the running of your business. So what does this mean? This basically means that the money that you spend has to be for the purpose of the business. You have to be spending this money in order to generate more sales, or with the expectation of generating more sales. Typical examples of expenditure include office costs, telephone, lighting, marketing, advertising, websites, costs of equipment, all of these kind of things, anything that you need to spend in order to help grow your business, in order to make more money. These are types of expenses. You've got two types of expenses essentially, or four, but we're going to run through two to start with. You've got allowable and non-allowable expenditure. So allowable expenditure is a type of expenditure which is going to basically reduce your taxable profits, which means you're going to get tax relief on them. So if you've got £50,000 worth of revenue, £30,000 worth of allowable expenses, your profits for tax purposes are probably going to be about £20,000. Another type of expenditure is non-allowable expenditure. Typically this might include things like business entertainment, and what this means is you do not get any tax relief on it. So if, in that example where we had that £30,000 with a £20,000 profit, that if you had spent £10,000 worth of business entertaining, that would be disallowed. It wouldn't come off of your taxable profit, so you don't get any tax relief on it. Other types of non-allowable expenditure include depreciation, which is how we measure how assets are basically worn out over their useful life in the account. It's a little bit complicated, but we have covered it in other videos. So the other two types of expenditure, you've got capital and revenue expenditure. Capital expenditure is basically expenditure on assets, or where you expect it to have a long benefit. So it's going to last, it's going to basically bring more benefit to the business over a period of longer than 2 years, is what people tend to say. So examples of this are going to be assets, so mobile phones, laptops, equipment, desk, all of these kind of plant and machinery, things like this. These are capital and they go on the balance sheet, so you don't get an immediate deduction for them now, but for most businesses you will get capital allowances, and this is the taxman's way of giving you tax relief on capital assets. At the moment you can usually claim the annual investment allowance, which is going to give you 100% deduction for the cost of these assets in the year that you purchase it. The other type is revenue expenses, and these are the type of expenses you incur on a day-to-day basis in order to earn revenue. So we've been through some of these earlier, stationery, postage, website costs, training costs, travel costs, cost of uniform, all of these kind of things that you need to spend on a daily basis in order to grow your business, go out, see customers, earn money. These are revenue expenses because you need to spend them in order to earn revenue. There are other types of expenses that you don't actually necessarily incur, but you do incur them without realising. Examples of this include travel expenses. Not many people know that although you might pay money for petrol when you're going around on business use, and you might want to try and claim some of the cost of your petrol, but unfortunately, unless it's a company car, this isn't actually how you claim it. What you do claim is the flat rate of 45p a mile for the first 10,000 miles, and then 25p a mile thereafter. So when you're going around on business use, visiting customers, going to suppliers, if you're in a property business looking at properties, anything that's for business use, visiting your accountant, that's a business trip, you should be recording this, and you can claim 45 pence per mile. So for a lot of people with older vehicles, you'll actually be making money on this claim. You don't need to take the cash now. What you can do is go to your director's own account and increase the amount you'll take later on completely tax-free. Another fantastic expense is using your home as office. So there are a couple of ways you can claim it, but the simplest is just by claiming the flat rate £6 per week, which is what you can claim as a director and employee of your business for using your home as an office. If you do have a dedicated area and your costs are actually higher than this, you can claim a little bit more, but it's worth checking with your accountant to make sure it doesn't impact with any other tax. So, how far can you go back claiming expenses? Well, the good news here is with trading expenditure, you can basically go back up to 7 years. Yes, that's right, you heard me correct. Up to 7 years you can go back. This is called pre-trading expenditure. So often with a business, it takes a little bit of time for it to come to fruition in terms of a lot of early expenditure, whether that's on website names, marketing materials, checking out the competitors, going to networking events, that kind of thing. You can go back up to 7 years and claim these on the first day that business starts. So let's say over the past 5 years you've been doing a little bit here, spending a little bit of money. Over the time, all of these invoices have added up to that's £1,000 worth of invoices. When it gets to your first day that you actually start in business, you start charging customers money, you start basically taking it seriously, you can claim that £1,000 as if it incurred on the first day that trade commenced. This is really fantastic and can be some seriously valuable tax relief, but you need to make sure that you keep the invoices, because if you don't have the invoice, if HMRC come along and challenge that this expense was ever incurred, you might find that you actually lose and it gets disallowed, and there might be some interest and penalties to pay on this. So definitely make sure that you're keeping details of every single invoice possible for at least 7 years, especially when it comes to this pre-trading expense claims. So for VAT purposes, what's the score here? When it comes to pre-registration VAT, which is VAT that you incur before you register for VAT, services that have been rendered to your business, you can go back 6 months and reclaim the VAT. Assets, you can go back up to 4 years and reclaim the VAT, as long as you still hold that asset at the date of registration. Massively valuable stuff and can result in you reclaiming thousands of input VAT back, so make sure you're keeping your invoices, and especially the VAT records as well, your VAT invoices, make sure you're getting them. So I really hope you've enjoyed this video. It's been fantastic running through what expenses are, how you can claim them, and basically how you can maximise your expenses. The main thing here is really good record keeping. It's what we recommend to all of our clients, because the more records you have basically in the event of a HMRC inquiry, it's easier to defend. So make sure you are using fantastic software such as Dext, such as HubDoc, that make it really easy and straightforward to stay on top of your expenses. If you find this video useful, please make sure you give it a big thumbs up, and also hit that subscribe button with notifications turned on so you do get notified as soon as you post brand new tax saving content 3 times a week. It's around 7 o'clock every day, Monday, Wednesday, Friday, so make sure you're subscribed, because what we're posting is massively valuable stuff. Bye for now, guys.